Now let's go to Ford Motor, which produces about 6.5 million cars a year. So you can get the sense that we're still, I think, in the top 5 or 6 in the world. But it's an American company, of course. This is the multinational corporation which invented industrial production. The Ford Model T, available in any color as long as it was black, manufactured in Dearborn, Michigan, in the Rust Belt, Trump country, in Detroit. That's where they're headquartered. Been in the news a little bit since then because they are moving production around the world, as is the case with companies like these. And in fact, they were one of the companies criticized by Trump in the pre-election period. But they basically said he's a fool and we're not going to pay any attention to him, which is an interesting response. Market capitalization, $46.85 billion. So that's a pretty hefty operator. Price earnings ratio of 5.93. That's not very high. Dividend yield of 5%. Let's go straight to the share chart because there's a lot that you can see from a 5-year chart. You can see sales have been good for this company, but the market hasn't really been ever excited.
Yeah, again, if you look at a 5-year chart like that and you overlay the auto and truck manufacturing index over that, it's been a perennial underperformer actually. So it has been a company that's struggling. It almost went out of business in 2008 through subprime. So
what was that? That was because the company was a little bit overextended. Lots of auto loans which it had on its own books, which had to get marked to market. So there was solvency issues. And the US government, I know, bailed Chrysler out completely, but what did they do with Ford?
I don't think they bailed Ford out though.
So Ford didn't need any external funding, but they came dangerously close to having a zero value.
Yeah, but very, very close. And I think the company has returned to profitability and it's turned around. But again, it's going through a very difficult period. So if you look at sort of all the credit model scores on this, very, very poor. Its debt to equity is like above 400%. So it is very, very leveraged, and it is going through a very, very difficult period.
But the products remain top sellers.
Exactly,
the Ford F650 truck, those enormous American pickups.
Yeah.
I think it's an all aluminum vehicle these days, but that's like still the #1 selling bucky in America.
Yeah, definitely. And I think it's the #1 selling bucky in South Africa as well, because they make a whole of the Ford Rangers here too. So
yeah, but that's a bit smaller. That's not so insanely large.
But again, I think fantastic products. But from an investment case, from a company point of view, still a lot of risks as well. Remember, I think you mentioned Trump in the intro. There was that whole debate whether they were going to move a factory into Mexico.
Yeah, because this has got to do with NAFTA, which is a North American free trade agreement, and Trump says he wants to renegotiate it because he thinks it's too favorable to, I don't know, to Canada or to Mexico or something.
And this isn't this isn't an issue that's going to be isolated to Ford, but I mean a huge amount of vehicles produced in Mexico that get shipped in. I mean a Mexican worker gets paid I think $8 an hour. An American worker of the equivalent standard gets paid $46 an hour. So there's a significant cost difference there. Again, also the Mexican worker is very, very skilled. So it's I think they produce like 90,000 engineers a year.
Mexico has been growing so fast, and why laughably it seems most of the human movement over that border is going south.
Yeah, and the problem is that when you build a car factory, so Ford is building plants in Mexico. It's an incredibly expensive process.
That'll take a while.
It's a huge sunk cost, and I mean Mexico, because of its bilateral trade agreements with the rest of the world and deep ports, it's a fantastic place to export from. But if suddenly you take out the U.S. market, which is by far the most important market for motor vehicles, everything starts to look a bit shaky.
And when you say take it out, you mean like, for example, there
could
be a
35%
tariff barrier.
Exactly, yeah.
Which would just mess up everything.
It would just destroy the whole investment case.
Okay, but notwithstanding all of those uncertainties and the debt and all the rest of it, they have almost 6.5 million units a year coming out of their production line. They trade on a PE of 5. We're about to talk about Tesla, which is a company which makes like a fraction of the number of cars.
True.
80,000 cars a year or something.
Okay.
But why is this thing so cheap? Shouldn't one buy these stocks now?
I agree. On a valuation basis, it is cheap, but I think you do have the risk in it. But again, you look at Ford earnings. I mean, Ford earnings 2017 down 9%. Revenue to be flat. Maybe in 2018 you might get 1% growth.
So it's the more general issue we were describing earlier. Earnings volatility.
And remember the whole car market at the moment. I mean, if you look at it's the SAAR numbers. Basically, it looks like it's gone through its peak.
And the monthly numbers out of the US, which looks at the likely projections for the full year, and if it's above 17 million or whatever, then it's good.
Pretty good. But and what you've seen at the moment is there's been a huge influx of new vehicles. And now, new vehicles, I mean, you can understand that it is cyclical because you almost get to capacity, consumer confidence dips a little bit, and then suddenly all those vehicles start moving into the second-hand car market as well, and they get reused. So
but I've been reading that millennials are starting to want to own cars again. The assumption was that they didn't, but now they do.
It's also, like, consumer trends are very difficult to call
One
as well.
other point we need to mention about this is China. China had some quite important subsidies where you got a reduction in sales tax if you bought a car with an engine capacity less than 1.6 litres. And that, I think, was a design issue to try and get people to use smaller cars, less fuel, therefore less smog, and so on and so forth. Apparently that ends at some point in the next, I don't know, 9 months or something. And there's a little bit of concern that maybe Chinese vehicle sales will slacken somewhat, and that's also a very important market. That's more than 20 million vehicles a year. Absolutely. And all of these companies we're talking about have partnerships in China where they manufacture vehicles and so on.
Ford Chang'an.
Yeah.
I'm not sure. There's a couple. There's Ford Hong Kong as well. So I mean they've got a good presence in China, and I mean they are trying to leverage. As you say, China is the growth market. I mean it's an incredibly important market.
Because unlike what we're talking about in these trends at driverless, what's in China, it's still a massive population with a very small number of cars, Didi, relative speaking. Yes, Didi, which is the Chinese Uber equivalent. So. Anyway, we've been waffling far too long here. We need to go hot or not.
Yeah, I'm going to go not hot because I think the industry is in flux. You've got regulatory concerns, you've got earnings growth concerns, you've got credit concerns. For me, this one looks like if you're going to maybe try a hedge fund style strategy, probably short this against one of the other auto manufacturers.
Well, not hot is enough. Let's not get too complicated.